Hey everybody, David the AI Guide here. Welcome to another episode on the AI Guide channel on YouTube. Thanks so much for tuning in. Be sure to follow us on Facebook, Twitter, Instagram as well, and also click the links below. My book on Amazon, The Beginner's Guide to AI, History of AI and Current Impact on 10 Different Industries. And the other link is free resources for you. Learn way more about AI than you can in these short videos. And that resource is meant to help you prepare for a highly automated future and the impact that will have on your career. So check those out. And thanks again for tuning in, and let's get going. So today we're going to talk about money. Every single company that there is needs money. So companies that are and established get their money from sales, from revenue. But startups, where do they get money? Well, they get money from venture capitalists, VC firms. They might get money from banks. They might get money from relatives. They might get money from private equity firms. It's very interesting what's happened to the market lately. And there's been big changes, as you know. So back in the spring, inflation really took off. And in fact, I think it even started to take off back in 2021, but it really took off in the spring. And it was very evident in wage increases, in the housing market, and in consumer goods. And there's a lot of reasons for it, partly the pandemic and pent-up demand from the pandemic, but also when people were locked down for so long, the real estate market was pretty weak. And then when things started to open up again, the pent-up demand for housing took off. So the Federal Reserve here in the U.S. instituted progressive interest rate rises to cool off the economy because it was overheated. And when they do that, that has an effect on the funding available to businesses from venture capitalists and private equity firms, banks, and others. I mean, at a baseline, anything that's borrowed as a loan, the interest rates have gone up, which is what cools off the housing market and the credit card market and stuff like that. But also, it affects VC firms because their ability to raise money in a high interest rate environment is diminished. Why? Because they have competition in the form of those interest rates and returns people can get on bonds and other things that do well in a high interest rate environment. Bonds don't do well on price, but they do very well on the interest that they pay you. So let's read a little statistics here and we'll figure out more about what's going on. AI startups face market realities as many struggle to reach outsized revenue projections in the second quarter, and I guarantee you that happened in the third quarter too, which just finished September 30th, and we're here in early October of 2022. VC funding slid 27.8% quarter over quarter for AI and machine learning startups in the second quarter. That's April to June of 2022. Of the 70 product categories tracked by PitchBook, only 21 are on pace to grow in VC funding in 2022, driven by leading vertical applications including sales and marketing, information security, and drug discovery. And this group, PitchBook, does updates every quarter. Their Q2 update of AI and ML emerging tech research includes updated market size estimates and spotlights on certain companies. The report also tracks major industry trends. So what are these trends that have affected revenue besides interest rate and people slowing purchases, people being other businesses, slowing purchases in an environment where business is starting to slow down? The report tracks major industry trends. AI is struggling in code completion. So we know that algorithms are extraordinarily complex, and a lot of times it takes a long time to get them to work properly. And apparently, the AI sector broadly is having problems completing codes of these new sophisticated algorithms. The next one is developments in streaming data pipelines. That means that algorithms need vast amounts of data, and they often get this data from data pipelines that are basically now these days streaming information continuously into the system where the algorithm resides or onto a cloud server. And I guess there's been problems there. And then how synthetic data is being used to simulate data for robotics and autonomous vehicle development. So there's a bunch of stuff that is impacting AI breaking through to new applications. And because revenue has not increased as fast as they projected, then it makes it more difficult for companies to raise money. And that means that these AI and ML startups are going to have to throttle back. They may have to reduce staff. They may have to delay hirings at a minimum, delay purchases, delay getting new equipment that they might need. These are all decisions that all businesses face in a climate like this, and AI is no exception to that rule. So what does this mean? Well, this means that some companies that are stretched to the limit on cash will go out of business. Those that are able to manage down expenses or delay expenses will have a better shot at surviving until the market turns around. This is one of the big problems with startups is they put out projections of revenue in order to get the funding that they get. And it's very easy to be overly optimistic with those projections and then miss them and then have trouble raising money. So all this goes to say that the economy has shifted, and as a result, AI firms are having more trouble raising money than they did back in the first quarter, which is January to March, or last year. And this will have a continuing impact going forward as long as interest rates are increasing, as long as other businesses are throttling back purchases of things that they might otherwise go on and get, like an AI solution, for example, that's pretty expensive, which many of them are. So interesting stuff, good stuff. AI is not accepted from the business cycle and business challenges of that cycle. And we'll see how this unfolds, and we'll update you later on it. So thanks so much for tuning in. Really appreciate it. Click those links below and get the book and the resources. The resources are all free. And we'll see you next time for another episode here on the AI Guide on YouTube.